Good evening, I'm Giuseppe Basile and yes, actually you can find at the website www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening, today is Sunday, March the 2nd, 2014 and it's 11 p.m. time in Toronto, and this is the third video of my Fibstalker weekly newsletter. In this video I'm going to review the Japanese mayor, US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. This video is part of a series that I distribute to my newsletter subscribers. So you can go to my website and subscribe for free. It only takes a few seconds in order to receive these videos and other material. I also suggest you review the information you find on my website with a lot of articles on program trading and high frequency trading, and I use spotting the footprints of program trading and price in order to gain an edge here. Now let's start to use it from the US dollar versus Japanese yen, and before I get into the daily chart and the successful 240 minutes trade I've mentioned in the last few days, I want to show you where we are in this time frame. And on the weekly we had this 97.70, which eventually started getting participation in this consolidation. You can review the previous video in the forex section of my website in order to review how we got there. And those who follow me know that I've been looking at this level of support. It's still being support here, and you know that below 160.64, then I'm going to look at the full retracement from lows to highs. So at the moment this level is still holding, and if 1164 is breached on the downside, then I will look at 99.59. However, in the last few days I've been looking at a short on the 20-40 minutes, and I provided information on this short in the previous videos. And the important trades, there were a number of important trades here that actually generated profitable trades here in the last few days. And I'm looking here at the lows to at the lows to lows that we timed from previous highs to lows, and there was a trade here which actually generated a free risk trade, but eventually then there was participation coming in this market, and which break this move lower, and participation came from the trades from highs to lows on the opposite side here. And as we can see, initially price was not able to breach this level, and price again went higher, and actually you could exit this trade at break even. The market came again to all the way halfway back from highs to lows, and I'm going to show you the sequence of measured move. As you can see, these trades could be timed here. I'm going to show you on the 15 minutes, and then you would see price getting into the first target to the pip, and then reacting to that level 101.25. So I want to show you on the 15 minutes how you would have timed this measure move. In order to time it, we need to identify a failure on the opposite sequence of measure moves. So first of all, I want to show you on the larger time frame, which was the resistance level, the 102.18 that we were looking at. And then the next thing to do was to identify the right sequence of measure moves. As you can see here, there was a first participation in 101.67, bringing price into first and second target right into that level of resistance. So once the next level in the next measure move in the sequence fails, then you could have sold at 102.10 with a stop above 102.30 here. If you know if you know the rules, and actually you could identify this trade with several hours in advance here, and then with a stop above 102.30 you would have enjoyed a free risk trade very early in the process here, on Friday actually. And in the morning this trade just hit the target, and now we need to understand whether we're going to see a continuation lower for it, and to see the next level of resistance, as we know, would be from trace from these highs to lows. So again, by studying the sequence of measure move on the 15 minutes, if we get a retrace into the next level of resistance now in 101.76, this will become a trade, a potential another potential profitable trade in this market. So congratulations to those who, following the method, were able to take some profits out here. Moving to the euro versus Japanese yen, we had quite a different story here. We still could enjoy a trade with a small gain here, probably, as the target was as the stop was actually hit here. So if you look at the previous video, you will see that here we were able to time this move lower, get a free risk trade, and then eventually get a retracement higher. And the reason for this is that, again, there was support below this measured move. It doesn't mean that the market cannot go lower, but as the market came here, we got participation on the upside. Still, there were shorts at 140.02, so I recommend to take this trade to see whether we would break this level. That didn't happen on Friday, but we could exit this trade at this level after taking half off at the target zero. Now, at the moment, we are seeing again a move lower here, and if we study the sequence on the 15-minute of what happened on Friday, this is very important because it can give us some hints of what could happen here going forward. First of all, there was no way we could actually time the move higher, the continuation of the move higher here, as on Friday we saw price just stopping at that support 140.40. So we opened below it in the morning, and now what we could see, we would actually see a retracement all the way into the highs to lows here. So it will be very important to study the sequence of measure move getting into that level from highs to lows, from lows to highs. Here we have an initial support at 139.64. If this continues, we could see a sequence of measure move going higher into this 140.30. And then if we get a break around this area, within this area, before we get into 140.47, we can actually trade the 61.8% of the next measured move. And when we break that, we can trade short with a stop above 140 47. That would be the next trade in this market if we actually retrace. The reason for that is that on the larger time frame, we can see we have actually two opposing measurement. One would be on the weekly, and we saw participation here in this market, but then there would be also another participation very clear on the downside from highs to lows. So there's a battle for the trend here between longs, weekly longs, and daily shorts, and we also have daily long participating in this battle. As we can see here, we got participation at 136 76, and at the moment we can have a move between these two levels, 140.19, 1999, and 138.77. So until this is resolved, we might see price moving laterally here. Before 138.17, we are going to retest 136.70, and that's going to be a second test, so very dangerous. And as we can see, the daily shorts here, they have a target well below that 134.57. So there may be very good opportunities presenting in this market very, very soon. So it's something to watch carefully. Finally, the pound versus Japanese yen, and here again we had this move higher, and then in the morning we had sorry, in the Sunday night open, we had this gap down here. You will remember again that we traded like for the US dollar versus Japanese yen, we traded this short here, and then we saw price moving higher, and this price actually found support at an extension short long, very similar to the euro versus Japanese yen, just it was an extension and was not a traditional move. It's not very different. On the other side, we saw that this was sufficient to break the all the way halfway back, which is a bullish development, and it was respected first, and then it was broken. However, when we study the 15 minutes chart, we see that without looking at the presence of resistance or not, if we were just going to study the sequence of measured move on the 15 minutes, we would have identified a failure already on Friday. And as we can see here, we had support at 170.01. Price went into 170.95, and then the next measure move in the sequence actually failed, and it failed on Friday because price went below that 170.44. Then in the morning, we said we saw a continuation lower. So again, we have here the same situation as for the US dollar versus Japanese yen. If we see a failure of the sequence of measure move higher into this 170.29 level, that's where we are going to trade short this market and try to bring it into 168.96 with a stop above 170.50, and always taking half of the position off when the risk when the gain actually equals risk here. So be very careful. There is another good opportunity in this market as well. This is it for the Japanese yen majors. So I hope you enjoyed this video. I wish you a very good evening and a great trading week next week. Thank you. Bye bye, and thanks for watching. Bye now.